Hi, I'm Roy Coulson. I'm Head of Proposition at Attivo, and I'm sitting with Phoebe, who is the Head of Sustainable Investing at LGT Wealth Management. Phoebe, thank you for spending some time with us today and talking to our clients that are invested in your sustainable portfolios. At Attivo, we obviously look at longer term financial planning for our clients and life planning, really helping them lead the life they want, which of course I think looks at kind of the world as a bigger picture, certainly. What's LGT Wealth Management doing on sustainable investing, and what's your approach to it?
So we've been involved in the world of sustainability for a number of years now. LGT, our parent group, is really one of the pioneers in this space. As a business, we've been carbon neutral since 2010, and now we've made really significant commitments to commit to net zero by 2030. And those principles at business level are also reflected in the type of companies that we want to be using in client portfolios. So the analysis that we do on the sustainable investment team, and we have a dedicated team of 6 individuals running the sustainable portfolios, really drills into the ESG profile of companies, looking at a company's environmental, social and governance footprint, how those companies interact with the world around us, but also importantly, actually looking at what those companies produce. Those companies need to be positively impactful from a social or environmental perspective, which really enables us to invest in the kind of companies that we need for the growth of the world, not just from a financial perspective, but actually making sure the world is a safe, prosperous and economically and environmentally sound place for us to be living in the decades to come.
Okay, thank you very much. Would you say there's any drawbacks for our clients that are invested in sustainable portfolios at all?
Look, there are some periods where, as a result of certain market factors, whether it's rotation into deep value stocks, whether it's like we've seen in recent months, the war in Ukraine, there may be environments where sustainable portfolios can underperform more traditionally run portfolios that have the ability to go into investing in tobacco or go into investing in defence stocks. But we foresee that as a fairly short-term stress point, and actually over the longer term, we strongly believe that sustainable portfolios can very much provide comparable performance. The academic data would suggest you're able to generate perhaps outperformance by investing in sustainable companies. They're able to tap into ESG opportunities and avoid situations of ESG risks. But I think the most important message is for clients that want to invest sustainably, that want to allocate their capital to the companies that are thinking holistically about the world around them. There isn't really a requirement for a compromise from a return or a risk perspective.
Okay, and that's good to hear. That's what we want to hear. We look kind of longer term, of course. What would you say kind of the mega trends we're going to see going forward are going to be?
So we use the UN Sustainable Development Goals in our investment process. This is effectively a to-do list that the UN set out in 2015. And really for the first time brought together all UN member states to agree where money needs to be allocated for us to have a better world in the future. So those on the to-do list is everything from eradication of poverty to the production of renewable energy to using our water systems in a more effective way to things like gender equality. Those are 17 of the goals as part of the framework. We use 11 of them in our process because we believe by allocating capital to liquid financial markets in those 11 goals, then we can advance them. Some of the goals need to be achieved by philanthropic capital or supranational organisational collaboration. So the 11 goals that we use in our process are then divided out to 4 pillars. 2 of the pillars are socially orientated pillars, things like healthcare and education. 2 of the pillars are environmentally orientated, circular economy and recycling, and then climate and environmental action. Now those pillars, and you'll see them on a lot of our documentation, really demonstrate where the megatrends are.
Okay.
So we think about healthcare, something that's happened as a result of the COVID-19 pandemic is a real focus on detection and diagnosis. So treating a problem, an illness, before it gets to the stage where it's causing a lot of personal harm and also personal cost, often to countries. So there's been a real shift in investment in diagnostic equipment and genomics and personalised medication. So that's a big theme for us. Within the education and training space, moving online, virtual learning, and thinking about enabling people to get access to credit and access to banking in a virtual world. That's a major theme under that second pillar. The third pillar being circular economy, so the reuse of resources in a more efficient and effective way, and investing in more advanced recycling systems is another mega trend in that third pillar. And then the final pillar, climate environmental action, something we're seeing broadcast across newspaper outlets on a daily basis. That involves investment in renewable energy, in green hydrogen, in energy storage, in green transport, a huge multitude of different opportunities there.
Okay. And you speak about kind of the 11 that you align yourselves to, of the 6 on top of that need the philanthropic part. Do LGT Wealth Management do anything on that side at all? Are there extra measures that you take yourselves?
Yeah, so we, on 2 different levels, LGT Group, so that's the global organisation, we allocate 10% of our group dividends every year to philanthropy. That's not just passively giving away many millions of pounds. We have an in-house dedicated philanthropy team that work with charities on a sort of 10 to 20 year time frame to look for opportunities to invest that money in local communities to advance education and to advance healthcare, as well as other environmental benefits. So that's what we're doing at group level. But then within our business, we're also allocating money to local UK-based charities. Our charity at the moment is a charity called Demelza, which is providing care for disabled and ill children, very close to some of our offices. And another thing that we do is looking at the sustainable changes that we make within our business. For example, switching across to electronic communication with clients rather than paper. Many of these changes actually save our business money. But that's not the reason that we're making the change. So 50% of the savings in year 1 of all changes we make and 25% of the savings in year 2 also gets put into a philanthropic pot called our Fit Planet Fund. And we use that on various different schemes and philanthropic initiatives. The whole idea is, like you're saying, filling those gaps, filling those 6 UN SDGs where we can't advance them using liquid financial markets, and ensuring that we are advancing all of the requirements of the UN Sustainable Development Goals.
So it's not just about looking after the financial future of kind of clients' money, it's making sure that the world and the biosphere is kind of better for them and going forward.
It absolutely must be. And thinking about the biosphere and biodiversity loss is a really important part of our awareness around sustainability. It's been sort of left behind a lot, and I think carbon and climate has got so much of the agenda and the focus. Really, unless we stop biodiversity loss, climate change and biodiversity loss are so intrinsically linked. But unless we stop biodiversity loss, we're not going to have food, we're not going to have medicine, we're not going to have cloth. So many absolutely essential human functions are not going to be able to be facilitated. And we have major biodiversity loss. The UK's lost 50% of biodiversity in the last 50 years. So there's some major challenges out there. We look to invest in companies that are solving biodiversity loss challenges, but also measuring biodiversity loss in portfolios.
Measuring as well. Okay, so investing in this way seems clearly very important, not just financially, but kind of going forward. What would you say from an investment perspective our clients' portfolios are going to look like going forward?
So from a sort of optics perspective, portfolios look and feel like a standard portfolio. The idea is not that you disinvest from a traditional mandate and invest in a sustainable mandate and the look and feel of it is wildly different. Mm-hmm. It's still a collection of funds predominantly, so a portfolio of funds, and in those funds you're investing in companies, or you're investing in company debt, or you're investing in sovereign debt. But underneath the bonnet, the selection process is obviously very different. We're allocating money to best-in-class companies, those companies that are treating biodiversity loss in the most effective way, companies that are lowering their carbon footprint, the companies that are the enablers of a net zero world, enablers of a more biodiverse world, and the companies that are helping solve some of the social issues. Mm-hmm. Now, many of those companies will be the Teslas, the Amazons, the Alphabets, the Microsofts of tomorrow. It's not about necessarily investing in startup businesses, but these companies that are very much coming through and really demonstrating that they are strong leaders from a financial perspective and also a sustainable perspective.
Okay. So our clients clearly in the short term may have seen some fluctuations within their portfolios. In the longer term, do you think that's going to be the case at all?
There are continued drivers over the next few months as to why volatility may remain elevated. There are geopolitical tensions that for the time being haven't gone away. There are concerns around inflation that have certainly been heightened as a result of the geopolitical tensions, which could get worse. And the resultants of all of that is central banks tackling interest rates in a more aggressive way than they certainly were at the start of the year. However, we know that markets go in cycles. There will, I think, be even more opportunities for clients that are investing sustainably as a result of all of the disruption that's happened this year, whether it's focused on energy independence, food independence, supply chain independence. And for companies that are sustainable and investors that are thinking about companies from that perspective, they have a head start. They know whether their business is outsourcing 5 tiers or is finding their lithium from a part of the world where there's major corruption, and therefore there could be an issue around the supply chain of sourcing that. You're more ahead of the game when you're investing sustainably because you have a huge amount more information at your fingertips. So the volatility may remain elevated. I think the opportunity set has got wider, and I think investing sustainably gives you the tools to be able to tackle that volatility in a potentially more adequate way.
Okay, thank you. And I think for our clients that are invested in the sustainable portfolios, then they can clearly see it's a very future-looking driver, not just financially, but also kind of looking after their world and the world for their children behind them, etc. So thank you very much for giving us that insight.
Pleasure. Thank you very much.